Hey friends, I'm back. There is a high-yielding dividend stock. It's actually paying 7.7% starting dividend yield. It's qualified too. It's on sale. The PE is now in the 7s. I want to share that in the video today. The stock contains some risk, but I'm buying it, so I want to analyze this stock in the video today. Over the years, as a dividend stock investor, I've done really well when I have purchased high-quality businesses that are on sale that have a fundamental issue or two that I think they can overcome. One of those was Altria. Another one of those actually was AbbVie, which is a very good comparable for the video today. Because back in 2019, I covered AbbVie. It was on deep discount. It was trading at a PE of 7 or in the 7s. And since then, it's done really well. And people have been asking me, hey, Ian, do you look at Pfizer? How do you look at that? Do you look at it kind of like you looked at AbbVie back in the day, back in 2019? And in fact, for a while, I did not because it was too expensive. But now, since the stock market has tanked and Pfizer has tanked on its own for a variety of reasons, the stock is, in my opinion, kind of reminding me of that situation in AbbVie back in 2019. I think there's more risk with Pfizer, but it's kind of reminding me of AbbVie at this time. And so I want to cover Pfizer today. As you can see on the screen in front of you right now, here's the stock chart. It's terrible, and I love it as a dividend investor when I see something like this. The first thing that happened with Pfizer is it was already just trending down. And it was trending down because of the fact that revenues had dried up from the pandemic era. But then, in November of 2024, when President Trump won the election, he was elected, and he was bringing RFK Jr. on board, there were some stock market concerns, in my opinion, that an RFK Jr. kind of regulatory environment might not be the best for Pfizer, which provides pharmaceuticals and vaccines. And so the stock at that time corrected. It corrected down, and you can kind of see that starting in the era of November 2024. Now, fast forward to April of 2025, and the stock is tanking again. And the reason it's tanking is it's falling with the overall stock market. Of course, we are facing a stock market correction related to the tariff announcements from President Trump. However, there are further issues with pharmaceuticals because there are talks now that there may be specific tariffs that target pharmaceutical companies and pharmaceuticals that are made overseas. Moreover, right now, it just seems even on those days when the stock market rallies a bit and it kind of goes up, it's doing all right, Pfizer is not really participating in that. So all of this leads to a really poor stock chart. And that's what gets me excited because I'm a fundamental investor. And yes, this stock, this company has a lot of risks. This is one of the riskier positions that I have covered on my channel, but I see value there, of course, for my personal situation. And as always, I have my disclosures, disclaimers at the end of the video and in the description below. But just to reiterate, this channel is not offering any investment advice. I'm just sharing my personal journey for fun and entertainment. It's possible to lose money. That's especially important to mention with a stock like Pfizer because there are risks. But I want to share some fun analysis. As you can see on the screen in front of you right now, here it is. And so my patrons already know this. I'll link in the pinned comment below. But I recently bought some Pfizer. I bought it at $22.16. And so it's 29.7% off the 52-week high. But you may not know that it's about 62.7% off the 22 high, 2022. So it's down, it's down, it's down, it's down. We saw that in the chart. But here's where it gets interesting. So when we look at the PE on a forward basis, and honestly, these forward estimates look reasonable to me based on the company provided guidance, we're now getting a PE in the 7s. And I highlight that because when I bought AbbVie back in 2019, the PE was in the 7s. You can see a photograph there of my old school video. I'll link to that in the pinned comment below as well. But hey, put in the comments below, were you around back there in 2019 when I had a lot more hair on my head? Back in those good old days when I was filming those videos with the whiteboard? Please put the comments in the comment section below. I love to hear from you. I'm so thankful for all of the subscribers who have been here over the years. And if you're new to my channel and you have not subscribed yet, I invite you to please subscribe. It means the world to me. I have new videos on the way all the time, and you don't want to miss out, so include that notification bell as well. But as you can see on the screen, there I am back in the day, and I was sharing on that whiteboard. You can see it on the illustration. Hey, AbbVie, it was trading at like 67.76, and at that time, the PE was a 7.68 forward. And so at this point, honestly, for Pfizer, where I bought it at 22.16, the PE forward is even lower than AbbVie back in the day. And so good stuff. It's becoming a parallel to me at these times, but I do believe Pfizer has more risk. We'll get into that in a minute. So the starting dividend yield right now on Pfizer on my tranche is a 7.76%. But the payout ratio is only 58% only. It's a little high. I'd rather see that around 50. But I believe the dividend is sustainable. They're growing it to about 2.5% per year on average. And the company has a $125 billion market capitalization. Overall, I'm excited about Pfizer. I'm not looking for huge capital appreciation for this. I think it could come in the future, especially with the Seagen acquisition. If they turn the business around, it resumes a lot of growth, certainly. But I'm buying for that dividend. 7.7% for me on a qualified basis is very meaningful, and it moves the needle in my portfolio right now in terms of current cash flow. That's why I'm buying it. I buy for the dividend, but the capital appreciation is the icing on the cake. So as you can see on the screen in front of you, I have more data on this slide that I want to cover with all of you. And so first, let's just talk about Pfizer. What are the risks right now? Well, we know the growth at the company had been slowing as they came off of huge sales from the pandemic era vaccines. We know vaccines are slowing down. We know there's possible legal risk. There's possible governmental risk. We know RFK Jr. and his administration are looking at all things pharmaceutical industry related, and who knows how that may or may not impact Pfizer. Possible pharmaceutical tariff risk. That being said, there are solutions happening right now. What are those solutions? Well, they made a big Seagen acquisition, $43 billion. This is their oncology acquisition, which is a hugely important area that they ought to be focusing on. It's great to see them doing that. They used the profits that they made during the pandemic to help pay for that Seagen acquisition. And just I put a note there to do. The Q1 earnings are coming out soon. 4/29/25. We'll have to keep an eye on that. The stock may go way down on it or way up on it or neutral. We'll see. But on the right-hand side of the screen, there I am with AbbVie. I'm kind of thinking back in time. Let's compare this to AbbVie. I love looking at comparisons. I love looking at comparisons in the stock market because history, it does not 100% repeat itself, but it does rhyme. And I have always done well. Everyone has different strategies, but for me, I've always done well when I have bought distressed assets that are on sale, that pay a high yield, that have some hurdles to overcome, but they overcome it. And boy, AbbVie reminds me a bit of Pfizer. Again, though, I think there was less risk with AbbVie, and it was a slightly different situation. But as you can see, what was the big problem back in the day with AbbVie? Well, the problem at that time is they had a Humira patent that was expiring. And what were the solutions at the time? When I bought it, there were no solutions. I like to sometimes buy stocks before the solutions are present because that's how I get a good deal. But after I bought it, they had some solutions. And the solutions were the Allergan acquisition for $63 billion. That helped diversify their business so they weren't so dependent on Humira. And they used all the money they made from Humira over the years to help fund that. And another solution was Skyrizi, a new drug that basically took off. And so that was the solutions for them. And the solutions panned out because you can see on the bottom right, I have a AbbVie comparison. Check it out. When I bought back in the $67 range, it was depressed. But now, even after the stock has corrected, and look, AbbVie has corrected just like Pfizer. It's corrected because the whole market has corrected on the tariff news. I like it. I like a good buying opportunity. AbbVie has also corrected because the pharmaceutical industry in general is a little weak right now. in terms of stock prices because the market is concerned about what could happen with tariffs on pharmaceuticals. Only time will tell. But as you can see in front of you on the screen, back in 2019, I bought in the $67 range. Now, even after it's corrected a bit, it's at $177.05. And so that's capital appreciation, 161%. Nice. I don't invest for capital appreciation, but that tells me I did my job buying it on value. But let's look at this. 2025 EPS estimate. What is it now for AbbVie? They've done well. They've brought the business forward. They got past the hurdles. Their strategy came to fruition and worked out great. The 2025 forward PE now is a 14. They're earning 12.18 a share. But what I like to look at is my PE on cost. Let's check that out. They're making 12.18 now per year, estimated this year. If I take my 67.76 from back in 2019 and divide it by 12.18, the PE on cost is a 4.66. So, whereas I bought it when the PE was in the 7s, now my PE on cost is in the 4s. This is the beauty of buying high quality assets on sale that have some obstacles that can hopefully overcome the obstacles. Only time will tell. But anyway, simple yield on cost for AbbVie is now almost 10% without reinvestment included. Market cap $313 billion. Good stuff. And so I look at these two, I compare them. I see parallels. I'm buying Pfizer now. It's a riskier position in the portfolio. I'd love to see it double or triple in size in my portfolio from here. And yes, I have to be careful. Ian, your number one priority this year is SCHD. Don't lose sight. Ian, you have other positions in your portfolio that are very important to focus on. Pfizer, it's more of an ancillary position. That being said, hey, that 7.7% yield, that is tempting. It gets me to my goals quickly. I'd rather kind of get to my goals quickly and then worry about those strategic kind of diversification goals a little bit later. And so I got a little bit of that going on as well. But I want to share a few more slides with all of you. As you can see on the screen in front of you right now, check it out. The next slide that I want to share just goes over the results that Pfizer shared last time. This was their strong full year 2024 results. Again, the 2025 Q1's coming out soon, but the most recent data I have just shows, hey, look, revenues, they are growing 7% year over year operational growth. Seems to me like they are getting back on track. And what I love about this, they're giving guidance. And the guidance is somewhat in the range of what the analysts are using as well, which confirms to me that yes, the PE really is in that kind of 7 range, 7 PE. How about that? And you can see there are some other metrics. In general, the company seems to be moving forth just fine. And if that's not enough, the next slide I want to share with all of you is also important. As you can see on the screen, this is more important than their recent results. They completed that acquisition of Seagen. Seagen was a major acquisition, $43 billion, and this is the company that is fueling the growth of Pfizer. Just as Allergan kind of helped AbbVie in its own way, Seagen is the future of Pfizer in my humble opinion. And so that's where I'm at. It's fun sometimes to kind of alter strategy to move a little bit away from just, hey, I'm buying SCHD every week to, you know what, there's a special opportunity here, kind of like with Altria when I bought it back at $41 and now it's jumped up a lot. Boy, the SIN stocks are doing so well. But I kind of feel, Ian, for your level of risk tolerance, there's something there, and that's what I'm doing. It's going to get me to my goals quicker. And so put in the comments below what you think about Pfizer, and please click the like button if you enjoyed the video today. Before I go, in terms of a full disclosure, I own the stocks mentioned today. I'm long Pfizer, ticker PFE. I am long AbbVie, ticker ABBV. I am long Altria, ticker MO. I am also long the ETF SCHD. I own those in my personal dividend stock portfolio. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. If you're going to go out and invest in the stock market, please consult your licensed investment advisor first. It's possible to lose money in the stock market. I'm just sharing my journey for fun and entertainment. And of course, I always have additional disclosures, disclaimers in the description below. Thank you so much for watching. I love you all. I appreciate your support here on YouTube, and I will see you in the next dividend stock investing video.